Good morning and welcome to the Hodl Boomer podcast. Got a question for you. What have I got here? Take a look. What are these things? Most of you are going to say, well, it's $10. And you'd actually be accurate today. It's $10. Both of these pieces of paper are worth roughly the same thing because America says so. But one of them is a little bit different than the other. Let me point something out. One has a green seal, one has a blue seal. It says silver certificate. This certifies that there is on deposit in the Treasury of the United States of America $5 in silver payable to the bearer on demand. That means that at one point, this $5 bill was worth about $368 in today's value. But what happened to this thing? It was representative of silver. So why can't I cash this for $368? Well, because in 1968, the government made silver certificates worthless. They just said the dollar isn't backed by silver anymore, and you can exchange it for $5. That's a microcosm of what the Federal Reserve has been doing to you for a long time. We're going to dig deeper today and cover the next section of the Creature from Jekyll Island. You're not going to want to miss it. Buckle up. Hi, and welcome back to the Hodl Boomer podcast, the podcast for seekers. People like you and me that really understand something's going on with the money, something weird. Our dollar is worth less, and there's got to be a better way. Bitcoin is that way, but if you're still seeking, this is the show for you. In the intro, we showed you this thing and probably piqued your interest. Wait a minute, there used to be dollars that represented silver in the Treasury. Yes, there were, and those dollars are worth $1 now instead of worth silver. Well, that kind of brings us to our point, and that point is that the American dollar really has no intrinsic value. It's fiat money with no limit to how much value can be put on it or how much can be produced. That's not me saying that. That's the reality we've been living with for decades. Today we're pulling back the curtain on how the Fed acts and on what they've been doing to the money. The Barbaric metal is the next chapter in the Creature from Jekyll Island, that book that Greg and I have been talking about for a long time that backs up and justifies everything Bitcoin is doing today. The Barbaric metal is gold. It's a kind of a secret science. The next thing we'll discuss is a mechanism called the Mandrake Mechanism. This is the crash course you guys need on understanding what the Federal Reserve is doing. Let me just introduce to you the sponsor of our program, and that's these three things here. If you wouldn't mind, we'd really appreciate it if you would link to us in these three categories. It helps the algorithm a lot. It gets our content out there, and it helps people understand more about Bitcoin. It's really important to us. It's also important that you follow us on our website and follow us on X to stay involved. So let's kick in to the Creature from Jekyll Island. We're about halfway through the book. Today we're going to be discussing the summaries of chapters 7 through 10, the mechanics of money manipulation. Why does this matter to you? Well, you can't understand Bitcoin without understanding what it's replacing. If you don't understand where money comes from or how it's being manipulated, and you're still in the dark saying, hey, gee, it's costing me a little more to live today than yesterday, then you definitely need this. So, this episode is foundational. It's about money itself, not just Bitcoin. Seekers, you and I, need to understand how and what fiat money is and how it's created. Mr. Griffin, in chapters throughout this book, explained the sleight of hand that the Federal Reserve keeps on doing. We're going to begin with discussing the barbaric metal. It's gold. Gold is the barbaric metal. It's called barbaric by central bankers. And why? Well, gold limits their power. It can't be printed. Historical view has been that gold is money. It's honest money. It is worth what it's worth. But central banks and politicians begin to manipulate the value of gold. Right now, it's valued at, I think, $45 or $38 an ounce or something like that inside the treasury. But as we know, the market value is much more than that. So they despise the controls that gold puts on and the constraints that it puts on their ability to increase the money whenever they want. The rhetoric there is used to demonize gold as sound money and to keep it grounded, to keep it valued less. Seekers have heard gold bugs mocked, and we'll explain kind of why. So let's begin by reading the chapter summary of Fool's Gold in G. Edward Griffin's The Creature from Jekyll Island. Excuse me, I'm going to look down and actually read this to you. Knowledge of the nature of money is essential to an understanding of the Federal Reserve. Contrary to common belief, the topic is neither mysterious nor complicated. For purposes of this study, money is defined as anything which is accepted as a medium of exchange. Building on that, we find that there are four kinds of money: commodity, receipt, fiat, and fractional. Precious metals were the first commodity money to appear in history and ever since have been proven by actual experience to be the only reliable base for an honest monetary system. Gold as the basis of money can take several forms: bullion, coins, fully backed paper receipts. Man has been plagued throughout history with the false theory that the quantity of money is important, specifically that more money is better than less. This has led to perpetual manipulation and expansion of the money supply through such practices as coin clipping, debasement of the coin content, and later centuries, the issuance of more paper receipts than there was gold to back them. In every case, these practices have led to economic and political disaster. In those rare instances where man has refrained from manipulating the money supply and has allowed it to be determined by free market production of the gold supply, the result has been prosperity and tranquility. Editorial: does that sound anything like what's going on today? Yeah, I think so. So money backed by hard money, currency backed by hard money, is good. Currency backed by nothing leaves open all kinds of manipulation. So that manipulation is kind of economics that are made deliberately complex to obscure simple truths. The myth of expert knowledge about money is kind of required to understand it. We'll talk about how jargon protects the system from scrutiny and the simple reality that money is created out of nothing. Why transparency threatens central banking. And we can sort of all together feel manipulated and feel a little bit confused by money. Let's dig into the next chapter, the summary of The Creature from Jekyll Island. It's called Fool's Gold. Fiat money is paper money without precious metal backing, which people are required by law to accept. The first recorded appearance of fiat money was in the 13th century China, but its use on a major scale did not occur until colonial America. The experience was disastrous, leading to a massive inflation, unemployment, loss of property, and political unrest. During one period when Bank of England forced the colonies to abandon their fiat money, general prosperity quickly returned. The Revolutionary War brought fiat money back to the colonies with a vengeance. The economic chaos that resulted led the colonial governments to impose price controls and harsh legal tender laws, neither of which was effective. Fractional money is defined as paper money with precious metal backing for part, not all, of its stated value. It was introduced in Europe when the goldsmiths began to issue receipts for gold, which they did not have. Thus, only a fraction of their receipts was redeemable. fractional money always degenerates into pure fiat money. Editorial, that's where we are today. Pure fiat money. It's worth what we say it's worth because we say it's worth what it's worth. Confusing? Absolutely. Intentional? Absolutely. Everything I talked about in the beginning of this chapter, all this expert knowledge about how money is developed, what the inflation rate ought to be, how it moves from near banks to central banks, how it moves through the system, the Cantillon effect, which we talked about a couple of weeks ago. All these things are very real, happening today. We can continue and talk a little bit about the next section, which is called the Mandrake Mechanism. It's really the core magic trick, creating money from debt. We can talk about how loans are created, how deposits become deposits, where they go, how they become reserves, and how that cycle repeats. We can talk about the expansion of the money supply without printing a single bill. Again, there's no intrinsic value to the American dollar. There's no limit to it. There's no accountability for it. The American dollar, and I'm quoting here, has no intrinsic value. It's a classic example of fiat. Money with no limit to the quality that can be produced. This is, all by itself, the engine of inflation, of debt, and of wealth transfer. This is really important. So let's dig in and read the words from Mr. Griffin on the Mandrake Mechanism. The business of banking began in Europe in the 14th century. Its function was to evaluate, exchange, and safeguard people's coins. In the beginning, there were notable examples of totally honest banks, which operated with remarkable efficiency, considering the vast variety of coinage they handled. They also issued paper receipts, which were so dependable, they freely circulated as money and cheated no one in the process. But there was a great demand for more money and more loans, and the temptation soon caused the bankers to seek easier paths. They began lending out pieces of paper that said they were receipts, but were which, in fact, counterfeit. The public could not tell one from the other, and accepted them both as money. From that point forward, the receipts in circulation exceeded the gold held in reserve, and the age of fractional reserve banking had dawned. This led immediately to what would become an almost unbroken record from then to the present, a record of inflation, booms and busts, suspension of payments, bank failures, repudiation of currencies, and recurring spasms of economic chaos. The Bank of England was formed in 1694 to institutionalize fractional reserve banking. As the world's first central bank, it introduced the concept of a partnership between bankers and politicians. The politicians would receive spendable money created out of nothing by the bankers without having to raise taxes. In return, the bankers would receive a commission on the transaction, deceptively called interest, which would continue in perpetuity. Since it all seemed to be wrapped up in the mysterious rituals of banking, which the common man was not expected to understand, there was practically no opposition to the scheme. The arrangement proved so profitable to the participants that it soon spread to many other countries in Europe and eventually to the United States. Folks, this is not a podcaster making things up. This is all footnoted, researchable, identifiable, and well understood. The banking system and the Federal Reserve is out to get you. The money is not really money. It doesn't represent anything of intrinsic value. It's really crazy. It's crazy. Let's continue on. One more chapter. The American dollar has no intrinsic value. It's a classic example of fiat money with no limit to the quantity that can be produced. Its primary value lies in the willingness of people to accept it, and to that end, legal tender laws require them to do so. It is true that our money is created out of nothing, but it's more accurate to say that it is based on debt. In one sense, therefore, our money is created out of less than nothing. The entire money supply would vanish into bank vaults and computer chips if all debts were repaid. Under the present system, therefore, our leaders cannot allow a serious reduction in either the national or consumer debt. Charging interest on pretended loans is usury, and that has become institutionalized under the Federal Reserve System. The Mandrake Mechanism is that by which the Fed converts debt into money. It may seem complicated at first, but it's simple if one remembers that the process is not intended to be logical, but to confuse and deceive. The end product of the mechanism is artificial expansion of the money supply, which is the root cause of the hidden tax called inflation. This expansion then leads to contradiction, and together they produce the destructive boom and bust cycle that has plagued mankind throughout the history wherever fiat money has existed. Crazy. There's an addendum to this chapter, and I'll read that quickly too. It's called Debt Cancellation Programs. By the way, this was first released and then updated and released many, many times throughout the years, and that's why this addendum occurs. Because banks lend money that does not exist prior to the transaction, many debtors have concluded that they are not obligated to repay. This is a compelling concept in view of the fact that bank and credit card loan contracts typically lead customers to think they are borrowing someone else's money, which is why they're willing to pay interest. When challenged in court, these contracts often are judged to be fraudulent, and there are now companies offering debt cancellation services to challenge these contracts, with the end in mind that debts will be canceled. Look, there's a simple summary for today's episode. The fiat banking system is destructive. It's destructive intentionally. It begins by calling gold the barbaric metal because it's barbaric to the fiat banking system. And then we began in this episode to discuss what sound money is in reflection of what's going on at the Fed. And it's obvious how honest weights and measures are really the enemy of the Federal Reserve. Now, you know our Christian background. You know why we say what we say. Let this be a call to you, no matter what your worldview or religion, a call to look at money as something that has integrity, that is transparent, that is honest dealings, that doesn't have any third parties manipulating or changing the value of money. Bitcoin absolutely offers an escape hatch from that Mandrake mechanism that we just discussed. Looks like Bitcoin is up a little bit today, and it's probably going to continue to bounce around for a little while. My opinion, nothing else. Greg and I are not financial advisors, let me be clear about that, but we do encourage you to keep seeking, keep looking, keep reading, keep learning, and you'll understand how Bitcoin is going to replace fiat dollars. You don't have to be economists. You don't have to have a PhD in macroeconomics to understand what theft looks like. The fiat banking system is all about theft. It's about stealing the value of your time and your energy. It's that simple. The next episode, we're going to continue this little bit laborious process of going through the Creature of Jekyll Island, but it's really important. We'll be discussing the new alchemy, war and lead into gold. We'll see how wars actually get paid for and why we say it's a new alchemy. Again, we invite you to subscribe to the podcast, to us on X, and to the website at hodlandtees.org. We would really appreciate it. It really helps us grow. So just a simple click is all that we need from you. And of course, you can listen to us on Apple Podcasts, Spotify, here on YouTube. And if you go to the website, you can enter the code WELCOME10 and take 10% of anything there. We love you. We appreciate you. We love that you're on this journey with us. Stack sats, wear the message, keep seeking, keep fighting.